Around each time this year, being June, just before the end of financial year, the ATO puts out a list of particular areas of the tax return that they'll be paying close attention to. So here we have it, people, the 2022 ATO hit list. Alright guys, here we are, the end of financial year. Very exciting if you're an Aussie, and everyone I'm sure is hoping for some big fat tax refunds. Alright, so here we're going to go through the ATO hit list for 2022. We're going to take a brief look at the items to keep you out of the crosshairs. I'm going to put some links in the description if you want to look at these items in more detail. Also, if you're looking for an accountant to help you through this stuff, I'll put a link in the description for that as well. We can help you with that. Alright guys, so apologies if you do hear a bit of background noise. Where I'm staying at the moment, there is a construction site next door, so if you hear a sledgehammer or an angle grinder cutting through on the audio, that's what it is. We'll just add that to the general ambience of the video and carry on. Okay, the first item we're going to be looking at is work-related expenses, which is pretty broad, but some of the things that they may be focusing on would be laundry expenses. So usually they give a $150 allowance a year for doing your laundry, but the thing is, a lot of people would have been working from home, so they are expecting work-related laundry and clothing expenses to be lower this year, and no, your pajamas are not tax deductible. COVID quarantine. Now, if you're on a work trip and you're forced to quarantine as part of that work trip, you may be able to claim expenses for a quarantine, which include accommodation, meals, and other incidentals. You cannot claim your quarantine if you were traveling to or from a work location. It has to have been a work trip, and you must have to have paid for it from your own pocket. You cannot claim it if your employer reimbursed you for it, for instance. And you cannot claim a quarantine if you were returning from a holiday, if it was anything to do with a personal trip. Even if you're working from that quarantine location, you still can't claim it. PPE, or your personal protective equipment. Now, you may be able to claim things like masks and sanitizer if you were required to wear your mask at work, if you were in close proximity to customers or colleagues, and if you were at risk of contracting the virus. There are some technicalities around this in when you can and can't claim it, and specific types of PPE. I'm not going to go down into the nitty-gritty detail in this video. I'll put a link, like I said at the top, in the description so you can research further. You can talk to us as well, or I might even make a video that goes into more detail on the COVID stuff. But we're just flagging with you here that this will be on their watch list, so just be careful when you're claiming this stuff and that you do it correctly. Now, with a lot of people working from home over the last couple of years, the ATO will be looking at making sure that people working from home are not claiming occupancy expenses. These are things like your rent or a portion of the rent. You cannot claim that if you're an employee. It includes your interest on a mortgage. You cannot claim that if you're an employee. And it also includes things like rates on your home. You cannot claim that. They will be looking at when you're claiming things like phone and utilities as part of your work from home expenses, that you're only claiming the work related portion, that you're not claiming any of the private portion, and they'll also be making sure that you're not double dipping there. There's a shortcut method that's been introduced in the last couple of years, and for instance, if you're using that shortcut method, which is an all-inclusive deduction that covers all of your work from home costs, you cannot claim that and then go and then claim your phone again separately. That'll be double dipping, so I'll be looking at things like that. All right, so the next category is rental properties and the income and the expenses that you claim against these properties as an investment. So they're going to be looking at your interest deductions, and this means that when you have an investment property and you're paying off a loan, there's a principal portion and an interest portion. You can only claim the interest, you can't claim the principal. Also, if it's a 50-50 ownership, if you own the house, say 50% with your partner, you can only claim 50% of the interest in your tax return. If you have a mortgage on your home, the interest on that is not tax deductible. It has to be an investment property. And if you have a holiday house, you can only claim the business or the investment portion of that. So if you're renting it out on Airbnb, for instance, you can only claim that portion of it. You can't claim the interest when the holiday home was used for personal use. They'll be looking at depreciation. So for instance, when you do a reno on your investment property, in a lot of cases, it's going to be capital works. You won't be able to deduct that up front. It's going to be deducted over a number of years. That's how depreciation works. The other thing is depreciation of assets. So if you put in a bulky piece of equipment like an air conditioner that costs say $1,000, well, you can't claim that all in 1 year. You have to deduct that over the life of the asset. And one of the newer changes to depreciation is you cannot claim depreciation on second-hand assets. So for instance, if you buy a investment property and it had a air conditioner installed, say 2 years before you bought it, you cannot claim the depreciation on that air conditioner. That'll be part of the total cost base of the house. So you can only claim depreciation on assets that are bought after the day when you purchase the property. Another thing that was changed a couple of years ago, but you may not be aware of, is you cannot claim travel anymore. So if you own a property and you're driving to it to go do an inspection or to do some maintenance, that's not deductible anymore. It may be deductible if you're running a business and that property is part of the business, or it's part of a property investment business through a separate ABN, for example, but in most cases your travel will not be deductible. Okay, the next category is your capital gains on crypto, property, and shares. But let's face it, people, we all know the real thing they're looking at here is crypto. So if you sell some crypto and you make a profit, you're gonna have to pay capital gains on that, much like you would with a share. If you're a day trader, like you treat it as a business, then you're going to be paying profits on all of your gains. Not a capital gain, but it'll be treated like income. All right, guys, so crypto is not private in most cases. You have to declare your gains and your losses on this stuff. Even when you make a loss, you'll carry that forward and write it off against future gains. But it has to go on the tax return, win or lose. Now, more and more, a lot of platforms are sharing data directly with the ATO. You cannot outsmart them on this, and if you intentionally leave it off your tax return, well, that technically is tax avoidance, so it has to go in there. Now with crypto, if you're trading like shares, so you're holding it as a period of time, you're not a day trader, and of course with shares and other property, if you hold the asset for more than 12 months, you get a 50% capital gains discount, but you cannot claim that 50% capital gains discount unless you hold the asset for at least 12 months. So they'll be looking at that. All right, so the next thing that will be on their watch list is the sharing economy, and this has pretty much been on the list every year for the last few years. So we're talking about things like Airbnb, Uber, Airtasker. If you're doing any of this gig economy type stuff, well, you got to declare that as income like you would a regular job, but at the same time, you can claim deductions to offset against that income to bring your profit down and pay less tax. And the last item that we're going to mention here that's on the ATO hit list of 2022 is your record keeping. And this is sort of an overarching sort of principle that sort of overlaps everything. So when you're claiming something, you got to have your receipt. You got to have your copy of your bills. You can't just make stuff up. For smaller items, have your bank statement, but have something to substantiate your claim. When you're doing work from home expenses and you're claiming that as a deduction, make sure you have some correspondence from your employer about your work from home arrangements, or keep a diary about the times and the hours that you work from home, the numbers that you're using to make up your claim. Make sure that is well documented. So if the ATO does happen to audit you or send you a please explain letter, make sure you have your documentation at the ready so that you can show them that this is how you came to your deduction figures. You can't just pull numbers out of thin air. You can't make stuff up. You gotta know where the numbers are coming from. You got to be able to prove that. All right, guys, so there we had it. I just wanted to make this a pretty quick fire video going through the main principles of the ATO hit list in 2022. Like I said at the top, if you want to do some more research on these topics that I've covered, I'll put links in the description to the ATO website. I'll also put a link there to my firm if you want us to work with you to help you with your tax return, even just a small consultation to help you on your way. I'll put a link there, we can help you with that. Other than that, guys, it is in your interest to stay out of the ATO crosshairs and off the radar altogether. The last thing you want is to be flagged as a risk, and then they're going to keep watching you for a number of years. So you really don't want to be in that position. Do the right thing, make sure you can back up your claim, and you should be all right. Also, keep a lookout on the channel for the next few weeks. We're going to be doing some more videos going into more detail on some of this stuff. We're going to take a closer look at work from home deductions, and we're also going to take a closer look at COVID related deductions. So keep an eye out, you might get some tips there, and hopefully we can get you a nice refund for the 2022 tax year and keep you off the hit list. All right, guys, thanks for watching. We'll catch you later.